Good afternoon, and welcome to Business Insurance Cannabis and Hemp Conference 2021. Our panel today on emerging cannabis exposures will take a look at how the evolution in the cannabis industry are impacting the insurance products and underwriting considerations around policy placement. Greetings, my name is Norm Ives, and I'm the Cannabis Practice Leader at NutraRisk, a division of Amwins, and I'm pleased to be here today as your moderator for this panel. With us, we also have Stephanie Bizzuto, the co-founder and president of marketing for Cannabis Connect Insurance, a retail brokerage specializing in serving the needs of the emerging cannabis industry. Also with us today, we have Keith Distel, VP of Cannabis Underwriting for Admiral Insurance, an AM Best rated A15 carrier providing general and product liability options to the cannabis business community. And last but certainly not least is Charles Pyfrom, Chief Marketing Officer at CanGen Insurance Services, who, interestingly enough, in 2008 became the first managing general underwriter to focus exclusively on facilitating placements for cannabis operators. And now with our introductions out of the way, let's get down to it. Stephanie, cannabis has always been an innovative space. Given the challenges over the past 2 years as businesses deal with the global pandemic, how has that impacted cannabis businesses? What are some of the new exposures, or what types of expanded business operations are we seeing in the marketplace, at least from your vantage point?
Happy to answer your question, Norm, and thanks for having me on the panel. So a few things here. As far as insurance is related, what we've seen during the pandemic was a boom in consumption. So with consumption, that became a influx of customers during a time of 6 feet apart. We had longer lines in front of dispensaries, so there was more of a general liability exposure. There were more security guards as well, just keeping the line as far as a retail shop goes. In other sections, though, we've seen commercial auto increase, we've seen delivery exposures increase, so more higher to non-owned auto. We've seen more commercial auto, which in my opinion, especially in this time, we didn't necessarily have a ton of people wanting to, number one, work in a pandemic. Number two, some were getting stimulus checks, and to be quite honest, they were not wanting to go and get this type of position at the moment. So what I was noticing was cannabis operators were having to select from candidates that may not have been as qualified as we would have liked to see, or higher turnarounds. So it was kind of like a trickle effect, right? So now you're seeing more accidents, more tickets on behind the wheel. You're seeing exposures such as employment practice liability because of all of the new COVID protocols. I did see a new article that was released about a company that was recently sued for not paying employees the 10 minutes it took them that day before starting their shift, such as putting on their PPE, which is their protection equipment, their temperature checks, things of that sort, which would accumulate to about 50 minutes within that entire week. So now there's a wage and hour claim that's out there in the marketplace. So I've seen a lot of different exposures. I've seen cyber with online ordering and curbside pickup, more workers' comp exposure. Employees that used to be just behind the counter are now hand delivering cannabis in someone's car window. So there's just been a huge influx in increased exposures, what employees are allowed to do, what is in the scope of their normal day-to-day, and just the trickle effect all around.
Very good, very good. There's a lot there to unpack. Probably more than we can probably get to in the next little 45-minute session, but we'll dive into as much of that as we can. Let's take the first thing that you threw out there and talk about consumption and consumption-related spaces. Keith, we've seen consumption-related exposures. There's definitely been an emphasis by a number of states to open up the opportunity for cannabis consumers to be able to consume on site or have a consumption-related occupancy or spaces. So from an underwriting standpoint, give me some of your fears as an underwriter. What would keep you up at night around a consumption-related exposure? What are the things that give you the most pause as an underwriter when we start talking about consumption-related spaces?
That's a fun question. I think everything that could involve potentially, even a liquor liability claim. I think it's just, you think about the newness of consumption, and what Stephanie was touching upon beforehand. We're coming from this world where all of a sudden we were thrust into an environment where taking point of sale systems with these operators, on the road with them, basically to have them available at any stretch and any point, and contactless delivery, contactless pickup, all those operations, were just huge. Now, I've seen, gosh, I was at the Ryder Cup a couple of weeks back. There was a couple of major events. People are just coming back. They're very, very, very interested in leaving the pandemic behind them. So I think going forward, consumption lounges and on-site consumption is going to be a huge boon. So from my perspective, the data, I think, is still a little bit too new in terms of auto accidents, what impairment really looks like. I think from that perspective, my biggest concerns are the sub apps accurate? Are these operators really keeping a lot of things up to snuff when it comes to understanding, having really good protocol in place when it comes to dosage? Is there bring your own cannabis exposure that we may not know about, that we may not be explicitly excluding, but we were told that it wasn't there. All of those control mechanisms that have to be in place, we're certainly concerned about. I mean, it's a newer side of the business. We're excited to enter that space and to see where it goes. And I know certainly capacity is limited at this point, but yeah, pretty much it's the auto exposure from it, and how that can tie back to the operators that we insure. It's so new to tell that we don't know where these losses are going to come from, but they probably will happen as more states come on board.
Okay, Charles, let's take that idea and expand on it a little farther if we could. Your company was one of the first ones to step into the space from a consumption standpoint and ensuring consumption-related exposures. From an underwriting standpoint, what kind of controls or protective safeguards do you want to see in place to make you comfortable? What does the profile of a good consumption-related exposure look like to you?
Yeah, absolutely. And thanks for having me on, and nice to spend time with you guys today. In looking at that from an underwriting standpoint, Keith mentioned a lot of the key points. If you look at it sort of like a liquor liability exposure and you apply the new lens of what does consumption look like and how do individuals take that, that's really the biggest concern we have is, does one person who has one, pre-roll, how does that affect them? And what do they do afterwards? And how does that tie back to the, overdosing or oversubscribing or things of that nature, where you really want to make sure that your staff are properly trained to identify the signs, which are yet still being sorted out in a, homogenous across the board basis of what does, being too high look like, or high enough, or things of that nature, to where it's a gray area in already a great industry. And I think what you really want to look for are best in class operators who have protocols in place that surround what they do from a dosing standpoint. How do they make sure their place is safe? We don't want to look at anything like a bring your own weed party. Like, that's not a thing most people want to look at insuring. So knowing that there are controls of, we train our staff to do X, we look for Y, we only allow them to purchase Z, things of that nature, and making sure it's in a location that obviously it's properly underwritten to the standpoint that if absent the consumption lounge, is it still a good exposure? And then taking that consumption down to the consumption component to the next level, what does that look like? And you look at obviously similarities in other industries, food and beverage as being the most prominent, but how do you make it a safe environment for people who have lots of quote unquote newness around their environment? Does it mean necessarily you put a bubble wrap on the walls? No, but it does mean that you want to make sure it's a super controlled and very, very limited in scope in what can and cannot take place there, and the commingling of, when people come to us with great ideas of, I'm going to make a, wake and bake breakfast hotel, and we're going to serve mimosas and weed, and how does that make you feel? And it just, I see Keith smiling over here because he's getting the heebie-jeebies like me, and I know Stephanie's going to shake her head because she's had a client ask her to do that, right? So with that, these are real things that we want to look at and make sure we put out a great product that not only can help support the industry, but also entice other carriers to bring in that capacity to help support the growing opportunities and innovative entrepreneurs that are moving in droves.
Very good.
Follow up on that too. What Charles touched upon, 100% accurate. And I also think it behooves the insureds out there that are wanting to get into the space to really pass on as much of that risk as they can. And that means, as many excellent controls that they could have in place as possible. I think a couple of these operators that I've seen before, I know Charles has mentioned wake and bake breakfast spots. I've seen operators come up with ingenious ideas of having a wedding planning operation where they're just going on site and there's alcohol, there's weed, but they're all sectioned off from each other. It's like, well, nobody's going to do one or the other. Everybody's going to party no matter what. So having the reality, the expectations, and understanding what is insurable and what's not at this point, is definitely real and something that I think operators will be understanding pretty soon.
Very good. You kind of hit on my next question, which was, and I'll just throw it out there anyways in case we missed one. Wake and bake, bed and breakfast, not ideal. Weddings, not ideal. What kind of consumption related exposures do you guys have a hard time with? Bring your own. I heard that very, very clearly from both of you, where there's not controls in space. One day consumption related events with music, I'm assuming is a little bit outside your appetite currently. We're still primarily looking at exposures that are tied to licensed cannabis operations when we're looking at coverage provided for consumption spaces. Correct? That's still realistically where we're at today.
100%. In fact, when we would entertain an on-site consumption risk, if we didn't entertain and write the other lines for it, we wouldn't just do an on-site consumption lounge risk exposure, because you want to make sure they have the protocols that make them a good cannabis operation, and then you add the caveat of how do they make the controls good for a cannabis consumption operation on top of already being a great retail shop or something of that nature. That's the most common, where we see a retail shop want to convert and have a cigar lounge, on the second floor, something like that, a VIP, a members only type event to attract it versus other cannabis operators down the street.
Very good. Very good. Okay, great. Let's shift to another topic that Stephanie teed up for us out there. Let's talk a little bit about delivery and delivery related exposures. And Stephanie, I'm going to come right back to you and kind of toss it into your lap and say, as a retail broker, as somebody who is working with these licensees side by side, day in, day out, what are you seeing in delivery exposures? What kind of coaching are you giving to your insureds? What's available in the market? Can you kind of give us a little idea of what's available in the market and what you're seeing out there right now?
Absolutely. So many operators have been enticed to entertain delivery because of obviously the social distancing component and people working from home more and just being at home. So many have asked about, what the cost benefit is on doing delivery, what the difference is between commercial auto insurance versus hired and non-owned auto. So many of the viewers on here may know, but commercial auto, basically those are vehicles owned by the operator, and they allow employees to use those vehicles for work purposes. The other business model that some have looked to adopt is hired and non-owned auto. And with hired and non-owned auto, it's when employees are driving their own personal vehicles for business use, so for delivery. We basically spent a lot of time with our clients on fleet management. Obviously, delivery has increased this year with COVID. Drivers, vehicles, those have all been factors that have increased, that have kind of changed the exposure of the account. But again, going back to those risk protocols of managing the fleet, running motor vehicle reports before hiring and during hiring, and running them regularly, and letting them know that with a driving exposure, in my opinion, and I think many others out here, there's so much more compliance and regulations that I feel need to take place with that cannabis operator, because there's just so many moving parts, right? You need to check the vehicles regularly, make sure they're okay to get back on the road, especially for longer haul. So there's just so many different components of delivery. It can be a very expensive decision if they are going to go that route, but it can also be very profitable. So I have been seeing many different requests in that regards, and I think that there's some positive responses that I've received about delivery. Insurance premiums seem to be fairly still pricey, but with insurance, auto all around, whether it's cannabis or a bakery or whatever the case may be, auto prices are going up, and there's still been some studies that show commercial auto is still not profitable. So I'm assuming we're going to see some more rate increases, but will it help them in this new way of working from home, living from home, being home more often? Absolutely.
So on the commercial auto side, are we still looking predominantly at E&S markets, placing coverage for the commercial auto? Still not a lot of admitted or common carriers in the space?
I would say there's a few admitted, and there's still many that are non-admitted, but there are a few that are admitted and they're easier to do business with.
Okay.
So yeah.
Charles, let's pivot to you and talk a little bit about hired and non-owned exposures. I mean, hired and non-owned. Let's whether in the context of delivery or outside the context of delivery, when you, from an underwriting standpoint, look at hired and non-owned auto in this space, that's got to be a little daunting at times to look at. What considerations go into hired and non-owned placements when you look at them?
Yeah, and that's a great question. Stephanie hit the nail on the head when it boils down to the expectation of what are the employees doing with the cars and what are the ramifications of the controls that the operator is putting in place for those employees. From an underwriting standpoint, on certain delivery exposures, we choose selectively to maintain not only our carrier partnerships, but also make sure we can offer broad coverage across the board. We don't want to go out and have carriers sustain, tens of millions of dollars on H&OA losses with no controls, and all of a sudden there's no capacity, and then to Stephanie's point, pricing goes even higher, right? We want to support this industry in a real way and make sure our carriers are happy with the results, and obviously with that circumstance needs to make sure that hitting profitability is one component, but also making sure that we can look to expand and help create these product offerings that are in demand by the buyer. So when we entertain H&OA, it's truly on an incidental, I'm going to the bank, I'm picking up donuts on a Friday type basis. And if it's someone where they have an H&OA need, and they do have an own commercial auto exposure, we'd entertain on a case-by-case basis under the right pretense and underwriting conditions, in that they do have a fleet manager, they have safety checks, they have protocols to where they have to turn in personal insurance on a weekly basis and validate that DMV records are current and appropriate as it relates to points or driving records. Absent that, it makes it really challenging because any Tom, Dick, and Harry out there is driving around dropping off cannabis. There's lots of unique controls that need to go into it to evaluate whether the price we're charging is easy, because it doesn't take long for $1 million auto claim to quickly give carriers some trepidation about supporting the growth of an industry.
Very good, very good. Keith, do you have anything to add to that? Any other controls that you look for from a hired and non-owned standpoint that you would be looking for on these risks? I mean, we've got DMV, obviously your current reporting. What are some of the other considerations that you guys might consider? I mean, are you looking for tracking in the vehicles? What other accommodations would you be looking for?
We're not at the tracking stage yet. I think we're still too trusting, I think, of our operators. So I think we're good there. But I think in terms of the protocol, DMV checks, proper insurance that's in place, proper limits that are being held by each of the drivers, in addition to what Charles hit upon as well. I mean, it's really truly an incidental exposure, or should be an incidental exposure if it's paired, especially with our general liability program. So I mean, if there is a delivery component, Typically, we have made certain exceptions. I know on a few different accounts where there might be an owned auto basis, but hire non-owned auto was just not being covered by the specific auto carrier, and they could not find a solution. It was a really important partnership for us, but delivery was covered elsewhere. If we had the opportunity to at least put a limitation on the delivery exposure and really kept it to the incidental piece, that's fine. And I think that's something that we're definitely it's definitely worth covering. It could still be tricky, even with those controls in place. I mean, truly the incidental nature is kind of a crucial piece for us, because we do believe that there are other markets that really support the need of delivery and more of a general auto function that shouldn't really be paired with the GL.
And Stephanie, just following up with you, so I don't put these two gentlemen on the spot in their companies. I mean, by and large, across the board in the cannabis industry, what they're describing is the standard practice in the space for the most part. If you're doing true consumer delivery, you probably need to be looking more towards a commercial auto program. Most of your general liability carriers anyways are looking at hired and non-known as being truly incidental, not directly related to a delivery exposure. Would you say that's fair across the board with all the carriers?
I would say it is when it relates to it being connected to the general liability. Is there monoline hired and non-owned auto for delivery out there? Yes, there is. But I agree, it doesn't really fit the value add of having the hired and non-owned auto connected to the GL. It is meant for just little errands here and there, and it's not meant to be used as a delivery hired and non-owned policy or a commercial auto policy intended just for delivery and or distribution, depending on what type of license you have. Absolutely.
Very good. Very good. Thank you. Thank you. Stephanie, let's stay with you for just a minute longer, and let me ask you. You really are on the front line here. Where are you seeing the bottlenecks right now in the insurance world around cannabis? What if I came to you as a risk manager for a large regional cannabis operator? I've got 3 or 4 dispensaries, maybe a production facility feeding me in, and I'm coming to you saying, okay, Stephanie, I'm looking at my insurance portfolio, trying to fix things. Where am I going to expect the pain points? Where are the challenges going to come in for?
So the challenges that I endure somewhat regularly is the total insurable value, so property. So trying to get those max TIV limits that the client needs for the larger facilities. So you're dealing with a lot of layers. Some carriers are not wanting to add the layer onto the other, but then you need to make sure that you're at least removing the co-insurance clause, because obviously the client cannot meet the co-insurance clause if they're not given the total BI limits or TIV limits. So just things to look at. That's usually a pain. And then the professional lines are getting a little more rigid in some areas. New carriers are coming out with more product availability, which is really exciting. And I think that will also help with the forms. But I've been seeing some additional wage and hour limitations in other coverages. I'm seeing now some COVID exclusions now on some of the professional lines. So just different things that are now happening at renewals that I'm having to take a double look at and make sure it's still the best choice for the client.
Very good, very good. Keith, let's kind of twist that question a little bit. What's a hard exposure for you to insure? What's an exposure look like that you're going to want to dig into a little more and ask a couple more questions? What's something that piques your curiosity as an underwriter to make you want to dive into a risk a little more?
I think for one, just from a basic general liability standpoint, anytime a cultivator says that they're operating out of a residential neighborhood, I love taking a closer peek at those because some of the things that you find in those, whether it's in Maine or Oklahoma or some other spot where it seems like it's just rules and regulations go out the window sometimes, they can be a little bit entertaining and challenging. But I'd say from an environment or an area that we would probably stay away from, testing labs are a very, very difficult thing for us to insure and to cover. And I think if operators have, more of a vertically integrated exposure, so they have that seed to sale operational spirit between cultivating all the way to dispensing and distribution. A lot of those operators will take as part of their risk management strategies, having their own independent testing labs for themselves. That's something that we love to see, because we love to see operators taking ownership from start to finish with their product and making sure that their purity standards are being met before it's going out to market. But that can be a tricky environment. And so, like I said, when it comes to these vertically integrated operators, when it comes to these accounts that are operating in the middle of nowhere, getting a really good understanding in terms of what's actually happening on premises. Is there a residential exposure? What do firearms look like? Are they carrying on their person? Is there a third-party security guard that's really guarding the place, guarding the facilities and the stock and everything else? Canines, what does that look like? Is it I don't even know, Pucky, the friendly golden doodle that's going to be on premises, or is it a vicious attack dog meant to cause harm to an intruder? All of those things are very, very important. And on the other side of that too, we've seen, I think one of the biggest surprises for us is, depending on the state, different states are offering, or actually will allow different dispensaries to operate, but only if there is, for instance, a medical director, a pharmacist, some sort of accredited medical professional to actually oversee the facility. It doesn't mean that they're writing scripts. It doesn't mean that they're diagnosing medical conditions. In some states, in some examples, they're forbidden or prohibited from doing that. But we didn't know that going into the space. It's not as simple as seeing a checkbox on a SUP app and an underwriter saying, well, they've said there's a medical professional on staff, we have to decline this risk. I encourage everybody that we work with to really take that a step further. It's more of a yes and approach. What are we looking at? Really dig in to see if this is a unique circumstance where we actually could help, or if it's something that we absolutely just wouldn't be able to support. So that's really the exciting part for me with this entire world that we're in right now.
Charles, I pose the same question to you. Where do you find the challenging spots, or as an underwriter, or somebody supervising an underwriting department? Where is it that you want people to dig in a little more, take a deeper look? What are some of the areas of concern for you from an underwriting standpoint in the cannabis space?
Yeah, no, that's a great question, and certainly a lot of the stuff of what Keith mentioned, we would certainly feel very comfortable with having the same sort of level of scrutiny. Seeing stuff in close proximity to schools, daycare facilities, saying they've been appropriately zoned and licensed. We recognize that there's not a whole lot of cannabis properties that are popping up in neighborhoods, to Keith's point, although it's probably more often than we'd all like to acknowledge and recognize from a legitimate business standpoint. When we see things like, hey, we're doing lots of manufacturing, but we're 25 miles from a closest fire station, or we're doing butane extraction and there's no water on the premise, things of that nature, to where we're looking at what could happen and how do we have something to mitigate that, whether that's central station alarms for fire and burglary or theft, sprinklers type of construction. We're seeing lots of stuff that's kind of being built out in the sticks or Timbuktu, and they have no expectations of it being, anything but secure, and it's Fort Knox. And if we, Keith and I would probably joke, like, if we heard my place is as secure as Fort Knox more than like 7,000 times a day, yet losses still happen. So we get that the onus on the operators of making sure their place is properly protected, not only from burglary and theft, but also from fire and other things in California, where Stephanie and I are. It's 365 wildfire season these years, and so making sure you have appropriate brush clearance. And from a capacity standpoint, what she talked about, there's plenty of areas where, due to the number of providers that are in this space, getting to the TIV and being able to allocate where you want to put your capacity from a provider standpoint. We work with our carriers all the time on making sure we offer capacity in areas where it's meant to help support the growth of this industry. And unfortunately, when you insure, 8 miles of cannabis in desert hot springs for miles and miles and miles, at some point you're going to go, it's kind of hard to look and having that concentration of risk and exposure. So when we look at kind of that mix of business, and we underwrite risks obviously unique one-off examples, but then also in the collective portfolio of risks that we underwrite for our carrier partners, we got to be prudent about how we allocate that capacity and what controls we expect of the operators to make sure that capacity is there for the foreseeable future. But we see all sorts of random one-offs here, and I'm putting my dispensary next to the 7-Eleven because I think I'm a genius and things of that nature. Like, you'd be surprised the stuff that still comes across our desks, and the information that is represented on an application. When you take 5 minutes and do a couple of quick Google searches, it routinely finds that sometimes it's very different. So.
Yeah, and I've shared this story with underwriters in the past. I got a chuckle out of one a risk that I stumbled across years ago. It was a butane extraction exposure that shared a common wall with a Montessori and a Mexican restaurant with no blast wall in between. And I'm like going, from just from a personal good conscience standpoint, I can't foresee myself trying to propose that to a carrier. And sure enough, the risk could never find any traction, because who in their right mind would insure butane extraction next to a children's daycare Montessori? It's sometimes common sense is sometimes lost on these risks, and we all kind of get a little chuckle out of them because of it.
Yeah, there's literally nothing good that could come from that scenario, right? So you write the risk and it's 10 grand or 30 grand, and all of a sudden you blow up a daycare facility because of untrained workers. Like, that's the worst kind of PR that we all don't ever want to wake up to. So we do our job in underwriting to the risks to where we don't have to have those scenarios play out.
Absolutely. And Stephanie touched a little bit on property capacity and just the difficulties in property. And if our viewers aren't aware, that the property market is very hard across the whole E&S world, nowhere more so than in the cannabis world specifically. Carriers are getting their rate or trying to get their rate elsewhere in the market. They don't necessarily feel like they have to step into the property component. So Charles, I'm going to come back to you on this one. And I've read a lot in the publications, the insurance publications lately, about the challenge with the market right now, the property market, is the lack of reinsurance out there to provide capacity for the carriers to be able to expand what they're doing in the property sections, property segments. Would you agree that reinsurance is a big part of the bottleneck, and do you see that changing anytime soon?
Yeah, you're not wrong in that commentary, and that reinsurance definitely is a big part of the overall solution. We're lucky that we've had great reinsurance panel partners for last 7-8 years that have loved what we've built as an industry, and what I think the people are doing it right, like the folks on the panel with me today, are looking to support. But overall, property capacity is something that, to your point, Norm, across the commodity, people have gotten handled based on either Hurricane Ida or some down power line or something happened in the Gulf. There's lots of issues. And so when I think large national, global, multinational global reinsurers are saying, where do I want to allocate my capacity? While we all see that cannabis is a booming and growing industry, recognizing that, hey, an extra 50 million of capacity here, 75 million capacity here, especially when a lot of the capacity asks are related not just to building values, but related to the business income component and the crop valuations on what these large cultivation facilities or large MSO oriented operators looking to grow and expand into. Those are real numbers. And so I think a lot of the capacity being on the sideline is true. I think the interest continues to increase on a daily basis. We regularly talk to our carrier and reinsurance panel partners about what we can do to help support that additional growth, so people like Stephanie can find a home and let the buyers buy what they are looking for. But it's not exactly a win-win, and certainly when you're looking at what sort of controls do you have in place, I mean, a $50 million facility going up is a real check, right? And we will obviously want to make sure people support this industry for the long term. So having multiple quota share partners on deals is not uncommon to make sure that if there is a risk, the community responds across the board. So.
Very good, very good. Keith, do you have anything to add to that?
I mean, I think in terms of what Charles was saying, I mean, it's really when it comes to this community ownership and this community partnership, I mean, it's so vital. I think with the newness of everything that's happening with the cannabis space overall, I think it behooves all of us, not only just on this panel, but across the industry, to look for those areas where we can we can be a little bit more creative, a little bit more collaborative across the entire insurance distribution chain. I love having conversations directly, with our wholesale partners, and if we have an inroad, with everybody along that chain to have a conversation, it's great. We educate each other. We look for those ways that we can support each other. But from a capacity standpoint, I say reinsurance is limited. I don't know if that capacity is really going to increase beyond the current thresholds at a mega pace, I'd say, until really federal legality becomes a reality. But for right now, I don't like the argument that, we have what we have and we have to just kind of deal with it. Well, it's like, where can we continue to kind of support and grow? What can we do to really help these operators that are out there really properly insure their businesses and protect themselves from very, very real hazards that they face? I mean, the fact is that they're still facing, they still have a product with a high street value. They're still carrying loads of cash. And until a lot of those things change in the business, it's still going to remain very, very scary, I think, for a lot of those operators to go about. And so we have that specialty focus. We have that understanding with what we have in front of us, and we're able to kind of still I think be a little bit more innovative with our coverage opportunities. I think that's going to help everybody in the long run.
Very good. Very good. Thank you. Thank you. Stephanie, I'm gonna pivot just a little bit more, and I'm gonna ask you the question that I'm guessing you probably get asked 5, 6, 10, 20 times a day. Let's talk crop insurance. Let's talk about what is available and what is not available with respect to crop insurance for cannabis and hemp operations. So can you just give us a thumbnail sketch, a quick overview of if a cannabis operator comes to you inquiring about crop coverage, what is the conversation that you're having with them? What's available?
So as far as crop insurance, I prefer to focus. The first question is it an indoor cultivator or an outdoor cultivator, right? Because my focus is primarily indoor cultivation, indoor cultivators. Since I'm down here in Southern California, it just makes more sense. It's in my backyard over in Desert Hot Springs and so forth. So one of those, basically, once I know if they're indoor or outdoor, if they're indoor, the coverage is fairly robust. There's vandalism coverage. There's coverage for civil riot if someone comes in and just damages the product. There's coverage for the different phases of the plant, depending on where it is, if it's in a bloom room or if they're clones. Each one's basically put together with a different plant value, and it's all wholesale plant value. But there's quite a few coverages available as far as the crop insurance policy goes for indoor. Outdoor, as far as I'm concerned, I've heard there's a carrier out there that does outdoor. I don't focus primarily on outdoor. So if anybody here on the call wants to elaborate on outdoor crop coverage, but indoor, there is fire, there's flood, there's civil riot, there's different coverages that will really protect the insured in the event of a loss. And we've had to file claims for crop insurance for indoor, and we've had payouts. So it's been worth investing in for operators. Absolutely. Perfect.
Charles, I'm going to pivot to you and ask you along those lines, because I know you guys do have a very robust crop program. Just to touch on a couple of things that Stephanie did touch on there is, by and large, there is not outdoor crop coverage available in the current market for marijuana plants grown outdoors, regulated marijuana. There is limited options out there for specified peril coverage if you are willing to step up to the plate and pay a fairly stiff premium. There is coverage available for possible wind events or possible hail events, but they're very specific peril events. By and large, the majority of what's available is limited to indoor or enclosed production operations with very predictable flows of product. The other thing to keep in mind is crop coverage is a very important and effective component of any risk management plan, because Your business interruption coverage oftentimes is contingent on you having crop coverage. If you have a damaging event to your building and your crops take damage and the crops are not covered, your business interruption is unlikely to respond because your loss is associated with an uncovered peril. So your business interruption does not necessarily key in on coverage if you neglect to buy crop coverage as a producer. So with that in mind, Charles, when I kick the ball to you a little bit and touch a little bit on, where you've seen crop coverage be advantageous for folks and how you see it being used successfully in the market.
Boy, Norm, it's like you've been doing this for a day or two based on that level of specificity there. So you're spot on with that. I mean, the expectation, and I think it is like 50 times a day we get asked, is can you insure my outdoor cannabis growth facility up in Humboldt County or out in the sticks or things of that nature? And the long and short answer is extremely unlikely from the traditional household players who built a brand in the space. And to the other point, are there unique, bespoke, parametric solutions that are oddly specific and cover XYZ peril as long as on the 35th day of the month it has 0.2% more water than you should have? Yes. You'd better be willing to pay like a 50-cent rate online for that and be really, to that point, that be your core competency in that if I lost my crop, that'd be it. And you're gonna have to bet, it's no different than going to Vegas for a lot of these guys who are say, if I roll the dice, am I going to be better off having bought the insurance or choosing to mitigate my expectations elsewhere as it relates to those parametric solutions? Because to your point, the carriers that are very few and far between absolutely do expect to get their pound of flesh for it. Where we've seen crop coverage be very successful, to Stephanie's point, running these massive growth facilities that have large indoor cultivation opportunities that's segmented off with great controls in place. A lot of these are brand new facilities or have been retrofitted from the ground up to make it cannabis friendly, and they build in the protocols to where it can be safe and a grow room can be restricted. If there's a fire, we stop it in one area so it doesn't spread throughout the entire facility. That's where we've seen it. And we've had claims where certainly someone has something go wrong, processor fell apart, someone put in too much water or didn't, or a light bulb burst and there was a fire. And yeah, that's what our policy is meant to protect, the policyholders in our industry and give comfort to where when they go to bed at night, that they've chosen a partner in the carrier that believes in what the industry is doing, where we're going, and we're here to pay losses when the unique events happen, and they happen more often than you think. We see all sorts of grow light concerns or scenarios where they have untrained staff that are moving in because they're growing so quickly that something happens or a quality control procedure gets missed and all of a sudden something goes haywire and now their entire crop is gone. Well, that's could be 6, 8, 12 weeks of work gone into it with zero ROI in the back end. So it's real. And certainly I think the price that the markets these days are charging for indoor crop is appropriate for the exposure to measure it with what the carriers are taking on.
Very good. Very good. Thank you. Yes. And just to kind of round this out and finish the conversation around crop coverage, let's touch on hemp for a minute, which is completely separate. Everything we've talked about up to this point has been about regulated marijuana and crop coverage. There are federal programs out there available to hemp operators. They are very specific. They're available through the federal government, through your typical channels along the lines for your traditional agricultural products. In the hemp space, they are specific to you have to have grown a crop the previous year to have some history. You also have a contract in place to sell the product for the coming growing season to even qualify for the federal program. And then beyond that, I'll turn you over to the feds to help you out with that. But there's just a little bit of a preview, if you will, of what's needed on the hemp side. And so as we're kind of rounding out our time here, I'd like to go ahead and in conclusion, I'd like to thank our audience for tuning in today. I'd also like to thank our esteemed panelists, Stephanie Bizzuto, Keith Distel, Charles Pyfrom, for their input and valuable expertise today. My name is Norm Ives. It's been my pleasure to be your moderator today. And on behalf of Business Insurance, I'd like to thank you for attending Business Insurance's Cannabis and Hemp Conference 2021. Thank you.
Thanks, everyone.
Thank you.
Take care.